Okay, meantime, let's talk about the Fed because they're going to be wrapping up their first policy meeting of 2020. And while no change in rates is expected, new index finding a shift happening among FOMC voting members. And Steve Liesman joins us with the details on that. Mr. Liesman.
Morning, Andrew. The normal annual rotation takes place on the FOMC this meeting, where 4 regional bank presidents exit and 4 come in. The CNBC exclusive Dove Hawk Index finds the new committee that includes the existing governors, the New York Fed president, and the new regional ones, judged slightly more dovish than the previous one. In a phrase, it's a Dove story. Every year, we ask respondents to the CNBC Fed survey to grade the Federal Market Committee on a scale of 1 to 10, with 10 being most hawkish. We're recording a modest movement this year from 4.9 to 4.6. That is a more dovish Fed. Enter 3 new incoming voting presidents, 4 actually, Mester, Harker, and Kaplan, who are viewed on the hawkish side and more hawkish than those leaving. Only one, Neil Kashkari from Minneapolis, viewed more dovishly. He's the most dovish member of all voters this year, according to our respondents. What's happened is that the existing committee members, including Chairman Jay Powell, Vice Chairman Clarida, and New York Fed President Williams, have been given more dovish marks. Here's where they were last year. And now take a look this year. For example, Powell fell from 5.5 to 4.4. Williams down by a point, and Clarida by a bit less than a point. So all 3 of those folks, the big 3 right there, you may call them, are judged more dovishly. What's it mean for interest rate policy? It's reflected in the View, which we reported yesterday, that the Fed is on hold for perhaps the rest of this year. It's reflected in the willingness of this Fed to not be concerned with the potential inflationary effects of record low unemployment. And it shows up in the decision to reverse course and allow the balance sheet to resume growing. It is now north of $4 trillion, or well north. In short, it shows up in expectations for easier monetary policy, Joe.